Hello there traders, welcome to today's live stream. It is the 1st of April, 1st of the month. So fresh new month, fresh new beginning for us. I hope everybody had a good trading performance last month, and hopefully we can continue and extend that into this trading month as well. It's going to be a tricky one. It's going to be a tricky one. The reason why, as we know, a lot of volatility around at the minute, all down to one person in particular at the moment. So there is a lot going on in terms of potential trade tariffs. So it's going to get interesting. Who have we got in there? Ratish, welcome. I hope you're well. I'm well, thank you. We're going to get into our usual as well. We're going to have a look at some of the recent data that's come up, some recent data that we need to kind of have a little look at. We're going to talk a little bit about the situation, because it's important to know if you are sort of blindly trading the markets at the moment, trying to, you know, predict and anticipate where the market's going to go in this situation. I think that's going to be a tough thing to do, to be honest. For me, I am pretty much sidelined right now. There are a couple of markets that I'm keeping my eye on. You know, I was very eager to anticipate in some buying of the Japanese yen again recently, but I kind of swayed myself away from it because there's just a huge unknown in the market. And when this happens, you know, we have to think about certain kind of particulars, right? Welcome, Innocent. I hope you're doing well. Good afternoon to you. So yeah, what is the market being driven by? So usually when I look at the market and I try and, you know, have a little look at what's coming up for this trading week, I'll come to an FX calendar and I'll go through some of the high impact, medium impact, low impact moves and pick out some of the big data points for the week. What should we be focused on? What's going to move markets essentially? And is there any kind of opportunity surrounding that? Yeah, that's essentially what we want to try and do when we look at an economic calendar. However, I think this data this week could be overshadowed by what's going on tomorrow. So 2nd of April is what's going to be called, or what is known as Liberation Day. That's what Donald Trump is calling it. And this is a post that is on the FT that you can come take a look at. I'll just actually post it in the chat so you can bring it up while you're watching the live stream. But just kind of give you an overview of what this is. It's essentially the rollout of those reciprocal tariffs from Donald Trump. Now, this has been on the radar for a while, right? We know as soon as Trump came in, tariffs are in, right? But has that narrative become worn out? Okay. Or is this narrative something that still has legs? That is also a question that I think we need to ask ourselves, especially when it comes to Trump tariffs. Now, the reason I say that is because of how the market has reacted recently. You know, we're going to take a look at the S&P 500 or even the NASDAQ, which has suffered a lot. You know, since the sort of beginning of February, we've had this strong downward move. We go to the monthly chart, we're getting this nice sort of, you know, pullback in the market. It's kind of very similar to what happened in 2022. But in 2022, it was pretty clear what was going on. It was the fact that inflation was rising, bond yields were soaring, and the Federal Reserve were going to hike interest rates. That is naturally bad for businesses because it costs them more to do business, essentially. And that's why we saw this sort of drop down in the stock market here, right? Which is this 2022 kind of drop down. As soon as they kind of announced that they were going to be hiking interest rates, you know, this was like the narrative that potential hikes were coming, bond yields were rising, blah, blah, blah. When they actually hiked interest rates, that move was done, you know, and the market had already priced that risk in. Are we seeing the same thing here, or does this still have a bit more legs? That's what I'm trying to work out. Now, I'm going to give one reason why I think this still has some legs to it. Okay, so we know the tariffs are coming ever since it's been announced, and as Trump is announcing sort of unexpected tariffs, we saw it on auto markets or auto industries last week, where we saw a 25% import tariff there. Yeah, we're starting to see this have pressure on the stock market, and this is investors and stock market participants trying to anticipate the risk to that, right? Now, the risk for me is that Donald Trump goes a little bit more aggressive. And, you know, there is a lot of talk that even sort of White House insiders don't really know what these reciprocal tariffs are going to look like, whether they will be reciprocal tariffs or whether there will be some reciprocal tariffs and some not so reciprocal. So I think what we have to try and judge is how is that going to impact the market going forward. Now, obviously, tariffs kind of lead to one thing, and that is usually a higher cost for the consumer. And when you see higher costs for the consumer, it can have a little bit of a stranglehold on their spending. When it has a stranglehold on the spending, then growth becomes a little bit more tricky. And that's why we're seeing this kind of downside move that we're getting in the stock markets at the moment. So is this going to continue? Is this narrative continue? I want to ask you guys a question. Okay, and the question is, I want to get you guys involved. Right. So I had a really good chat with a trader last week, and we were discussing the narratives at play in the market. And one of the narratives that came up was Trump tariffs. And this trader put it in such a way that I never actually thought about this in that way before. So essentially, and I'm going to kind of break it down in a second, but the question is Trump tariffs, right? And the question is, what act are we in? Okay. Now think about a play, right? Think about a play that you go and see at the theatre or whatever. There's usually acts in it, and this is how he broke it down to me. You have Act 1, which is the beginning, Act 2, which is the middle, Act 3, which is the end. You know, so what act are we in on this Trump tariff narrative? Are we in Act 1? Are we at the beginning of this? Are we in Act 2? Or are we in Act 3? You know, is this essentially priced in, right? So that's what I would call Act 3. Act 1 is this narrative is just getting started. Act 2, it's already started, but there's still legs to it. And Act 3 is the market has already priced this narrative in. Okay, what act do you think we are in when it comes to Trump's tariffs? Okay, I'll give you a couple of minutes to think about that, and if you can pop your answer in the chat for me. I just thought this was a super interesting way to think about the market, because I've never really thought about the narrative in this way. I've always thought about it as how old is the data, essentially, how fresh is that information, okay, or how old is that information. You know, it's very, very similar to, I guess, where we trade with the current trader reports, or even trade with currency strength and weakness. How long has that strength and weakness been going on for? How fresh is that, right? You know, when you're trading a trend, you want to be in here, right? You don't necessarily want to be buying in here, okay? Because the act, you're in Act 3, you're Act 3 of that progression in that trend. So let me know what you think. I'll leave that up there. Are we in Act 1, Act 2, Act 3? I'm going to give my opinion on where I think we're at. But yeah, I always thought this was an interesting way to kind of pick out what's going on. But let's just kind of give you a little bit more of a breakdown of what's going on. So when we think about sort of Liberation Day, what is happening, you know, this was a report from Aidan Ritter from the Financial Times. And here we're just kind of looking at sort of what is going on in terms of Liberation Day. So, you know, tomorrow is President Trump's Liberation Day. The moment we are told he will announce the substance of his trade policy, especially on reciprocal tariffs, right? Reams of Wall Street research on the topic has washed up an unhedged inbox. And despite a lot of talk of uncertainty, it's fairly clear set of consensus expectations emerges from it. There are 4 points of broad but hardly universal agreement, blah, 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 blah. Right, okay, so the tariff program that Trump announces will leave average levies on US trading partners at between 10 and 20%, with most commentators placing the number in the lower half of that range. There are lots of charts floating around comparing these figures to historical levels. Don't really need to know about that, okay? There are just some unknowns, right? On the other hand, Wall Street doesn't know what to think about two essential points. It remains unclear which tariffs will stack on top of one another and where and only the highest tariff will apply, and the severity of treatment of non-tariff barriers, okay? So there's still a lot of uncertainties going on when it comes to the narrative around what is going to happen to the tariffs and who's going to get it applied and how much is going to be applied, okay? So we've got a few answers coming in. Dan said, for me, it's Act 3. Ratish is saying Act 3 for the current round. Hi as well, Dan. Innocent said Act 2, but there'll be a second round, so Act 1 of round 2 will come along soon. Okay, interesting. I'm more on the Act 2 side, okay? And the reason why I'm still on the Act 2 and I've not yet gone over to Act 3, yes, we've known for a while that these reciprocal tariffs are coming into place. But the problem I think we've got is that there's still very much an unknown going on as well. So I don't think the market's quite yet fully priced that reciprocal or that unknown in just yet. Now, this may all change by tomorrow, okay? You know, we might actually see that Trump just comes out with the reciprocal tariffs and there's no extra uncertainties. I think in that sort of realm, then, you know, we've blasted past Act 3 and everybody's closing the performance for the night, and we're going to see sort of the stock markets, you know, continue to rally to the upside, because at that point, then I would think the norm would come in. If we go take a look at the US 10-year bond yields, for instance, they're dropping to the downside. Usually, you can even see the US 2 years dropping to the downside as well. So typically when bond yields fall, we usually see a better performance in the stock market, okay? It's not directly correlated because, you know, we have stock markets rallying even when bond yields are rising as well. But at the same time, you know, we've got this kind of pullback in the market that's happening, you know, so where are we in that at? And I just think that uncertainty around certain things still keeps that in Act 2. So it's not the freshest news because we know that it's been out for a long while, but at the same time, we're kind of nearing, I would say nearing this point. If I was to put like a little, let's just put like a taskbar in here, right? And we said that's Act 1, that's Act 2, this is Act 3, okay? I would say we are like here, okay? Right, if I was to fill the board up with kind of like the progression of where we are, like a progression bar, right? I would say that we've smashed through Act 1, okay? And we're not even in the beginning of Act 2 now. I would say like we're nearing the end of Act 2, sorry. That's where I feel like we are in this current moment in time. Now, obviously, we can all have differences of opinion in that, you know, because it's not about being sort of right or wrong in terms of where we are in the act. It's just about understanding potentially where we are in the overall market narrative, okay? So this is where I feel like we are at, okay? So that's why I still feel like there is still an element of risk, and I think that risk is going to bring some further downside to stock markets. Whether we will recover quickly, I don't know. I'm keeping very much a close eye on things like the volatility index. I'm keeping a very close eye on the fact that is just keeps kind of flip-flopping between that 20 number and dropping higher and above. But this is where I think I am. But I just wanted to kind of bring that up because I think it's important to think about the market in this way. So whenever you're looking at sort of the narrative in the market, just ask yourself the question, what act are we in? It's a very good example at the moment. Look at oil prices, right? So oil prices are super important to the market. You know, they determine sort of future inflation, things like that. Now, over the past sort of 3 weeks or 3 or 4 weeks, we've been rising, okay? The market has been rallying to the upside. Now, we do have the narrative in the market, okay? So this is the narrative for me when it comes to normal oil prices, okay? Trump wants lower oil, okay? Wants producers, okay, wants to produce more to bring prices down. OPEC a few weeks ago agreed to increase production. Okay, that brings down oil prices, right? Now, this narrative in the market, this oil narrative, I'm going to make this a little bit wider, bring it down, has been in play since here, okay? Right? Around the 13th, well, when was the inauguration? Around the 20th of Jan, right? So when President Trump came in, you know, one of his first speeches was talking about seeing oil prices lower, right? And we've had it, you know, oil prices continue to drive and drive and drive and drive. But as time goes on, you know, how long does that narrative continue to remain the same, right? So I would say, as a good example of this, I'm just going to draw our sort of Act 1, Act 2, Act 3 bar out again. Right, so this is Act 1, Act 2, Act 3. A1, A2, A3, right? And what I'm going to do is I'm just going to do that. Because I think this narrative now has completely shifted. Because think about it. This was when it was in Act 1. Right, it was fresh, market was trading lower, everyone was still kind of skeptical of the downside move, and then, you know, all of a sudden we broke the 72.50 level, which then started to see some buyers try and come back into the market, and they failed significantly. So then it moved on to Act 2. It was that secondary kind of downside play in the market. Now this is where I think we got to Act 3, this $67 area, okay? And the reason why I think it got to Act 3 at this point was because this narrative had already been in shape since January, okay? And we're coming to sort of March, and it was like, it's this narrative still here. Are traders still willing to push those oil prices down further as price expands lower? And I thought to myself, I don't really like the downside in and around this area. I did actually short a couple of times that failed. But at the same time, it was like, is this, what part of the act are we in? And this is how I want to try and think about sort of the market going forward, and think about how, you know, the Trump narrative where it comes to tariffs comes into play. You know, what are the, is there still a shock factor to it? Is there still an element of surprise to it? And if there is still that element of uncertainty, where does that put us in the timeline of the narrative? Okay, so just something to think about. I just wanted to kind of get your brains going today, and hopefully that was something that made a lot of sense. But this is why I still feel like there's potential downside to come when it comes to tariffs. And I think the risk is the fact that we don't know what tariffs are still left to play. Okay, what is left to go? Okay. So yeah, let me know your thoughts on that. Innocent, it's like a war, and yet it seems no one has won. Yeah, exactly. I don't think nobody wins in war, right? Essentially, because there's always substantial losses on either side, and you know, that's the same when it comes to trade tariffs. I think Trump's got to be very careful of what he's doing, because he's kind of putting on these, and this is another narrative, I guess. He's putting on these tariffs, which is going to, yes, help America in terms of when you think about longevity, where if they are sort of bringing things centralist, right, they're bringing things back into America to produce their own products. He also wants to bring sort of inflation down so that he can make America competitive in the global market. But at the same time, he's also getting other countries to essentially release huge amounts of stimulus. So think of Europe, right? He went over to Europe and basically said, we're not going to protect you guys anymore unless you pull your weight. And he then caused the EU Commission or the German sort of stimulus in the market to throw out sort of 800 billion in stimulus. So what I'm trying to get to is the fact that he's kind of forcing other countries to also go into that kind of, well, we need to start looking after ourselves rather than this kind of global outlook. But what could that do? It could reduce demand in the US, right? And I think if it starts reducing demand within the US, then I think the market's going to struggle. I think we're actually going to see a very similar playbook to what we saw when Trump was first in power, especially when it comes to the likes of the US dollar, right? You know, think about the US dollar downside. Has that narrative finished yet? I don't think so. I think we are going to see continued US dollar downside as Trump continues to kind of pull America out of the global space and bring America more sort of central or de-globalize America, essentially. So again, that's another narrative. And you know, where are we in that sort of narrative? I actually think we're still in sort of act one of that narrative in particular. So we'll see how that one kind of plays out. But I think Trump's got to be very, very careful, because we actually had some recent data, didn't we? If we go over to the calendar here and just go to last week, and we can come down to, I know, is that this week? Okay, last week. Look at the CB consumer confidence. So again, more sort of consumer data and consumer sentiment data. So you've got the revised consumer sentiment data down here as well. Again, just came in lower, right? So we've got to be a little bit careful, because obviously consumers are those that spend in the economy, and they're not doing that, right? They're not doing that. Look at that kind of downward trajectory we had. We had a nice little uptick, and then as soon as we kind of entered sort of 2025, consumer sentiment has been driving down. Look how the NASDAQ has been performing since the start of 2025. Consumer sentiment being dragged lower, stock markets are moving lower, okay? Because if there is a lack of sort of profits coming from these big firms, because people are unwilling to spend, because they are frightened to spend, because they don't want to get to a point where inflation skyrockets again, because that's what they're essentially being told, then there is a good chance that we're going to see this consumer sentiment remain pretty low. If we look back when this was kind of fairly similar, it was in that sort of 2022 period, right, where we had that decline here. Okay, so I'll just block that with the comment now. We had that decline here. So we had a similar path in 2022. Again, this was more to do with the fact that inflation was rising. We don't have that situation at the moment. Inflation is sticky, but it's not necessarily rising at this current moment in time. If we were to see inflation rise, then that's obviously going to be a bad thing, and we're probably going to see consumers get even more worried. But until this data starts really ticking back up, you know, is this downside narrative going to remain, right? So just something to think about. I came in this morning and I was looking at the market today, and I was like, how do I present to you what's going on in terms of this Trump trade tariff chaos, right? And it's going to be difficult to point out direction. I think the only thing we can probably think of is, where does the market see risk? And when we got to the start of this week, when we look at the volatility index, we actually had a gap higher on the volatility index at the start of this week, right? Gapped up higher into this area here, which kind of shows you the intent of investors right now. Back above that 20 line, I said anything below 20 is pretty good. And we did get that kind of, as we were breaking below 20, we had a nice little sort of drive up in the stock market. But I was always very, very cautious of seeing any kind of development here, especially going into something like this, okay? Just to kind of point out something else to you as well. You know, there's a nice little bit in this paragraph here in the FT as well. Just kind of talking about, we've seen some sort of soft indicators coming out recently. Some soft indicators that the wealthy might ease off on their spending. Again, kind of reducing those spendings. The University of Michigan Consumer Sentiment Survey, which is what I was just kind of talking about there, showed it sinking among the top third of earners faster than their cohorts. So you can see this graph here. It says money doesn't buy happiness. Top 33%, middle 33%, bottom 33%. And look at the sharp decline there. So even the wealthier Americans right now are not buying. You know, they're not, or at least from a consumer survey basis, they are also worried about the future of the economy. And if they're worried as well, they're less likely to invest in things, right? So that's something just to keep an eye on going forward. So I've posted that FT thing in the chat if you want to go take a look at it. I think it's well worth the read if you want to you know, take a look at that. It's by Robert Armstrong and Aidan Writer. So have a little look at that because it explains what's going on really, really well. Let's go on to some of the data then, and we'll go into the currency strength meter and see how we can potentially kind of position ourselves going into this trading week. Again, I'm going to openly say it's going to be difficult, okay? So what have we had this week already? Let me actually go to this week here. So first of all, we had some China data, right? China data came out, wasn't actually too bad. Non-manufacturing and manufacturing PMIs came in above 50. Expansion, great. You know, China doing okay in a way. German CPI stayed the same, 0.3% down from 0.4. Nothing really to shout about here. But then we had an RBA interest rate decision. Again, kind of gone slightly under the radar, hasn't it? Because of the fact that we've got these Trump tariffs coming out on Wednesday. But usually an RBA interest rate decision would be high on our radar to talk about. Now, I did a little bit of digging into what the RBA said. They held rates at 4.1%. Retail sales came in a little softer at 0.2%. So if you ever want to read what a central bank's doing, and I suggest you do, because if you want to understand fundamentals a little bit better, you want to be following what the central banks are doing. Why? Because they determine interest rates, and determining interest rates impacts currency fluctuations, okay? Impacts currency prices. So what I'm going to do, I'm going to just click onto, this is the Reserve Bank of Australia, okay? I'm just going to pop that in the chat as well. If you want to take a look, you can head over to this website and have a look through it while I'm looking through it as well. But essentially, all you want to do is come to the Reserve Bank of Australia. They do it really well because they just put the news and announcements here straight away. You can see we've got the monetary policy decision. You can watch the video of it. So if you click onto it, it'll open up a page and you can watch the RBA governor go through the speech there and kind of go through the questions and answers as well. And then you've got the statement. This is all you kind of really need to look at. And once you click on the statement here, you can read through what is going on. And, you know, great, underlying inflation is moderating, fantastic. If you want to be really quick about what this does, copy, right? Go like this, click copy, head over to ChatGPT, throw it in ChatGPT and say, give me the most important points from this, okay? And it will bullet point what are the most important things within that, okay? So just in case you kind of didn't want to read through it all, then you can also do that as well. That's a little hack that I do every now and again when I don't have time to read through it. But, you know, underlying inflation is moderating. So yes, since 2022, pretty much like everyone else, inflation has been falling. Nevertheless, the board must be confident that this progress will continue so that inflation remains to the midpoint of the target band on a sustainable basis. What is the target band? Okay, so the target band is between 2 and 3%. So they're telling us now, right, that they want to see inflation below the midpoint. So they're saying that CPI needs to be comfortably around 2.5%. So to me, that means probably one or two sort of data sets around that 2.5% before they start really thinking about cutting interest rates. They've also talked about the situation overseas. Okay, so if we look a little bit more sort of broadly speaking, hang on, where is it? There was something here as well. Okay, here. Uncertainty about the outlook abroad also remains significant. On the macroeconomic policy front, recent announcements from the United States on tariffs are having an impact on confidence globally, and this would likely be amplified if the scope of tariff widens or other countries take retaliatory measures. Okay, so the RBA are basically saying there's a risk here that the outlook is uncertain. We can't give you directions on what we're really going to do because there is a uncertainty around. Okay, they also talk about sort of what's going on. Sort of domestic demand appears to be recovering. Okay, that's sort of a good thing. However, businesses in some sectors continue to report that weakness in demand makes it difficult to pass on cost increases to final prices. So because they're not really seeing demand in their business, they're not passing on the sort of cost increases onto the consumer. Okay, so that inflation shouldn't really rise because demand is weakening. That's what this is telling me. It's saying that demand is weakening in Australia. Okay, they also talk about sort of wage pressures have eased a little and productivity growth has not picked up as well. So yeah, they're basically saying that actually the data is now starting to shift a little bit. Now, how has that affected the Australian dollar? Well, first of all, the first thing you want to come and do is go to the Aussie yields, right? What is the 2-year yields? 3.6% trading now, dropped significantly lower. And what happens is when yields drive lower, the currency will drive lower as well. Why? Because they're expecting now the RBA to cut. Look at the 10-year yields. That was fairly range bound, was high up at the 4.5%. Just a couple of, well, say a couple of weeks ago, it was last week we were seeing that they were up at 4.5%, now down at 4.35%. The current interest rate in Australia is 4.1%, right? So starting to see this coming lower as well. When you look at the 2-year, it's at 3.6%. So when you look at the difference between the 2-year and the current rate at the moment, there is quite a substantial gap. Current rates are 4.1. Okay, so they're looking for a minimum of 50 basis points of a cut coming from the RBA very soon. Does that impact currency prices? Absolutely. And when we look at the Australian dollar, it did start to fall, right? We had that nice little sort of downside move yesterday, very aggressive close. And if we see that continuation of that move down in bond yields, then I would expect the Australian dollar to continue to weaken as well. So, looking at the market at the minute, you can see that we've broke through these lows. So now you can start looking at kind of strategies, right? Looking at the condition of the market. We've got this kind of nice little break to the downside here. Now, maybe you don't want to trade it against the US dollar because we've got stuff going on with the US dollar at the minute. But if we kind of stay below this 50 moving average on the 4-hour time frame, and I think we could probably see this market move down towards the 61.50 area. Okay, because I think there's a risk that Trump announces something unexpected. I think that will strengthen the US dollar in the short term, and we'll probably come trade back down to the 61.50. If we look across the board, can we look elsewhere? Aussie Swiss, this is a market we've been looking to get short on recently, in line with currency strength and weakness anyway. But now we've got that kind of fundamental backdrop to it. We've got the 10-year yields as the backdrop to it as well. is there a chance that we start continuing to break lower here? Right, look at that 4-hour market is starting to creep back to the upside. If that were to break, like we saw here, could that be a good opportunity to see Aussie Swiss trade to the downside as well? So keep that in mind. I really liked Euro, Oz and Pound Oz longs last week. I didn't take them, but you know, when I look at Euro Aussie, this is something that I would have looked to have positioned myself in. If you know, this was my previous trade where I got out for a small trading loss. I've kind of cut it at this point. We came back into these swing lows. This is how I would have normally traded. I would have waited for a breakout of this consolidation, bought that candle high there and let the market run. I didn't do that. I waited for a bit more of a pullback and I just didn't get involved in this market. But when I look at this daily chart, I can see, because we were talking about this secondary phase, right? So we're in that secondary phase. Now we're in the primary phase of this move. Okay, so now we're in this kind of daily primary phase. I can look at sort of lower time frame pullbacks as well. So 4 hours coming down here nicely on the Euro Aussie price, going back down into this kind of 72.50 handle. Is this an area where we can start looking for continuations to the upside? Again, how am I going to do that? I'm going to look for trend breaks. You know, if this market comes in this area here, maybe we get like a head and shoulders pattern break above 173. That could be something nice to look into for a bit of a move to the upside. But I'll just monitor this lower time frame trend, because if it keeps pulling back, great, I can get in at a better price. So I'll just monitor how this kind of breakout continues now, because you know we could fail at 1733 and this market drive lower, but you know I think that we're probably going to see a little bit more Australian dollar weakness coming in at the moment. The other one was Pound Aussie. Again, didn't take this, but I was looking at how I could have took this move, and we were looking at this on Tuesday, because I talked about this breakout, because I actually had a long position in here and I put an expiry on it because I wasn't at the computer, and I missed out on that entire sort of move. But look, the market's breaking back below the hourly 50 moving average at the moment. It's pulling back, which is great, because that means if I think that we could see this market move higher, then maybe there's a chance that we can try and buy this little bit of a move again. Now I do favour sort of Euro Aussie over Pound Aussie. When we go take a look at the currency strength meter, I can show you why that is. Any questions so far, guys? Oh, sorry, just punched the mic there. Any questions? Let me know. So let's have a little look at this then from a currency strength and weakness point of view. What's going on this week? Well, we've seen a little bit more of an uptick to the euro. Euro was at +5. It's gone to +2. So we saw that kind of pullback in the market. It's now kind of breaking back again. Yeah, it's still in the positive territory. I still feel like there's, again, a bit of legs to euro at the moment. Pound followed a similar path to euro the week prior. So we were at +5, we're at +3 now. That's a change of -2. So strong, but in that reversal situation. Okay, and I would only look to really buy pound against really weak currencies. One of those is the Australian dollar, right? -5, remaining weak at the minute. Obviously, we just saw the good data, or say good data, the okay data out of China at the start of the week, but at the same time, demand in Australia is starting to fall. So, you know, the RBA may start cutting interest rates pretty soon. That could be bearish again for Oz coming up. New Zealand dollar went from 3 to -1. That's actually be a -4, shouldn't it? So that's actually wrong there. We go here, -4. So Kiwi, a weak currency as well, and I've put that on the wrong side. Oh, what I was doing on Sunday. Might have to change all these around now. So any New Zealand pair needs to go away. Let's get rid of that. Get rid of that. Must not have read that properly. So we actually want to be short Kiwi CAD, which makes a lot of sense now, because I looked at all the Kiwi pairs and I was like, these do not look like they want to go long at all. New Zealand Swiss and then Euro Kiwi needs to be added there. So let me go change that over here. Euro Kiwi, bullish. New Zealand CAD, bearish. Kiwi Swiss, bearish. See, it said Kiwi Yen bullish, and I was like, there is no way Kiwi Yen is bullish right now. So it looks like we're going to have to go through these charts together anyway, because I completely messed up on that one. So New Zealand is actually negative, dollar positive, CAD really positive. Again, think about the CAD situation in the market. Think about the narrative around the Canadian dollar. Is this move priced in? Could we actually see sort of dollar CAD downside after the announcement of the reciprocal tariffs? Because this market has been sort of going nowhere. Okay, so this market is just completely sideways, apart barring sort of a couple of those kind of surprise moves higher where we had those kind of tariff situations going on in the first place. So really speaking, how is dollar CAD going to react going forward? You know, once these reciprocal tariffs get announced and we see, you know, because we know Canada is likely to impose sort of their own tariffs and retaliate with tariffs, is that going to keep this market range bound, or are we going to see some downside to dollar CAD? That's something as well. What kind of narrative does the market hold over CAD right now? That's something to consider. Swiss is fairly strong, so I like the idea of buying Swiss. Yen did drop from 4 to 0, but honestly, with the heightened uncertainty in the market, I want to buy yen. So I kind of ignored the strength meter on that point. But let's get through to some of these then. So we need to kind of update a few of these. So let's go take a look at Euro Kiwi, because really speaking, I should be long here. So let's have a look at last week. Last week was bullish. So I'm going to put that as bullish. And then all I'm doing is following this situation here. So I already know what the next thing is. Are we above the daily 50 moving average? Yes, we are. What is the momentum? Now, I determine momentum by, is price moving away from the average, or is price moving towards the average? Okay, so price is moving away from the average, especially if we look at Friday's close, right? At the end of the week, price is moving away from the average. So that gets a bullish note. The next step I'll look at is US dollar, is the stochastic, is that bullish? Yes. And then I look at trend. Is this in a bullish trend? Is it making higher highs? Yes. Okay, made a higher high here from that recent move. And what phase is that in? So are we in the secondary phase? Are we in the primary phase of that? Okay, so we are in the primary phase here. So that is a buy, and we had a daily bullish close yesterday. So looking to buy Euro Kiwi as well. Looking to see on pullbacks, can we look to get in on any kind of changes to the trend structure there. Let's go take a look at the Kiwi pairs then, because now I've had to flip my bias on those because I somehow misread that when I was going through my analysis initially. So let's go through Kiwi CAD. So Kiwi CAD, how did Kiwi CAD close last week? It closed bearish. Okay, boom, there we go. How does it close relative to the 50-day moving average? Did it close below the 50-day moving average on Friday? Yes, it did. Just about, anyway. What is the momentum of that market? Well, it closed away from the 50 moving average, but kind of on it at the same time. So when I do that, I just put it as a neutral. What's the stochastic doing? Well, stochastic is still technically bearish. Okay, it's not pointed back up above. And what is the daily trend here? So I can see that we had higher highs and higher lows. Pull back here. That would be the low there, and the market came in and still kind of closed in that area there. Okay, so it didn't actually get what I class as a change of trend. So what I'd be looking at is that low there, and I'd say to myself, do I get 2 closes below that low? And I don't. I got 1. Okay, now obviously information has moved on since, and we've got that secondary close in the market, but at the time we didn't. So in that case, I will go with the fresh data. No point looking at the old data at the time, because there's literally no point. That has given us a new swing low, so I will be saying that is a downward trend in the primary phase at this current moment in time as well. Okay, because this day has not finished yet, so I can't class that. So looking at this could be good for a little bit more downside. We've got this nice kind of trend structure going on here on the 4-hour time frame. You know, I like this kind of 82 handle up towards there, that 50 moving average. Again, just kind of watch these lower time frames. Do they start to break down, and do they start to match the higher time frame sort of bias that we're building here? So I'm going to call that a sell. And I need to have a look at Kiwi Swiss as well. So Kiwi Swiss a lot more simple. I know that was a bearish close last week below the 50 moving average. We closed away from the 50 moving average. We're in a stronger trend here. So that's all just kind of pointing to sells. Even the stochastic is in that sort of sell mode as well. And let's have a look at Kiwi Yen 2. Kiwi Yen, yeah, all just kind of points in the right direction for actually selling that market. So I like the idea of selling Kiwi. I like the idea of selling Aussie against these kind of stronger currencies. Let's have a quick flick over. I just wanted us to take a look at the pound. We do have key data we did have key data last week coming out of the UK, but I like the idea of the pound selling off. You know, when we had to look at what was going on in terms of the fundamental tracker last time when it comes to the UK, we had quite a lot of red on the board here when it comes to certain changes. I need to update this a little bit. I haven't had a chance to update the latest commitment of trade report, so I don't know necessarily where COP are at. So hedge funds are still buying pound at the moment. Okay, so that's quite interesting to see. They've reduced their short positions and they have added to their long positions in the market. So maybe there's still a bit more upside for the pound to come, but you know, the data's starting to get a little bit tricky here for the UK. If I just pop this onto pound only, apply filter, and we'll go to last week. This is the kind of data I was talking about. Manufacturing PMI, which again is not really anything that we really need to kind of focus on when it comes to pound. They're more of a service-based industry, so services PMI is more that we want to take a look at. That expanded to 53.2. Don't know if I have that in here just yet. Yeah, I need to update this. So that's pretty good. CPI came in at 2.8%, which is okay as well, because usually that means that we're going to see a decrease in interest rates. Retail sales didn't fall as badly as what was anticipated. We were expecting that kind of minus 0.3%. Got 1% actually. So data actually weren't too bad when it comes to looking at it last week. So I do need to update that. Let me just have a look at yellow folder data as well, because you know, final GDP growth is still the story in the UK. Again, where are we in that narrative? You know, we've heard that narrative for like the past 3 months now. So is that something that is actually going to continue to drive the market, or will the market move on to something new when it comes to the UK? So starting to see a little bit of downside here, but I think this is more because the dollar's starting to just rebound slightly in and around this area here. I mean, do you want to be a buyer of the pound here anyway? For me, no. But what I will just show you is, let me just bring up another screen here. Let me just log into some seasonal data. So just looking at pound US dollar, over the past 10 years, the start of the year has actually been pretty crap. Over the past 10 years, we usually do see a little bit of a bottom around the 25th of March and moving higher. If I expand that out to 25 years, usually we actually have quite a decent bullish run at the end of March through to May, and then we get a little bit of a bearish spell from May to the sort of end of April, start of May, through this period here. So usually around this point we can see some kind of bullish momentum there. Hasn't really worked that well in the past 10 years, as you can see, you know, 1, 2, 3, 4 real big downside in the markets, and we have to be careful again because of the UK's relationship with the US, right? Hi Ibrahim, how you doing? Sean, how about Aussie CAD? Yeah, take a look at Aussie CAD as well. You know, Aussie CAD to me is probably more on the sort of settle side of things. You know, looking at this kind of weekly structure at the moment, you know, very nice kind of pullback to the upside here. Let's have a look at the monthly first. You know, closed down on the month, failed to kind of break into any kind of new highs here when it comes to the monthly chart. Aussie CAD to me isn't necessarily a market I trade too often, but you can see that we've kind of broken out of this kind of structure here, consolidating, going sideways. It looks like we're failing at this 89.60 though, you know, in and around there. It seems to kind of fail at those March lows. So March lows, yeah, 3rd of March or end of April, 3rd of March there. So end of Feb, sorry. So yeah, just kind of going a bit sideways here right now. I would think from kind of like currency strength meter and things like that, this market could start to push lower, but you know, look at that sort of trading range that we're in right now. So I think if I wanted to be involved with this, I want to be selling range highs, buying range lows. So if we push into the range high here and we reject it, then that could be an opportunity to sell towards range lows, in my opinion. If we breach range lows, then your market could continue outside of that. But I'll keep an eye on that. It's not necessarily a market trade too often, but I'll just pop a sort of alert up at those range highs there, because there's no point trying to deal with the range in the middle of it. It's just no point. You want to wait until, yeah, are these sellers that have been getting in here, are they going to stick around? That's what we need to find out at that point. Silver buying, currently in drawdown. Yeah, I got out of my silver position. It hit the 34.50 target 1, which was good, but I moved my stop loss then. So basically what happened was 34.50 was my target. It hit 34.50, so I banked one of the positions, moved my stop loss to break even. But what I noticed was the market was trying to change structure here. We had this really kind of aggressive downside move, and actually closed this on Friday, because what I noticed was we closed below that previous 1 hour swing low, and the market was getting a little bit choppy on Friday, and I was a little bit worried about what was going to kind of happen next. So I ended up just closing the second position out for a very small profit. So didn't quite get the $35 that I was looking for, but at the same time, you know, ended up with a profitable trade there. Yeah, in drawdown at the moment. Yeah, I mean, look, the market is still technically trending to the upside. I still like upside to this market. You know, if I take a look at the gold silver ratio, it's getting higher, right? You know, market is still more interested in gold than it is silver. So if you look at gold prices are still rallying, right? If you look at the daily chart of gold, it's still fairly high. When you look at the daily chart of silver, it's pulling back a little bit. So, you know, we're up at 31.50s now, next stop to the 32s. And I just think that every kind of dip here is going to get bought up. I do feel silver will go with that. But if you look at the gold silver ratio at the moment, investors are still favoring gold, which is baffling considering how expensive it is. When you take a look at silver, I think, well, silver is technically the better investment right now. But, you know, we see a lot of central banks still trying to buy up gold at the moment, which I don't know whether that spells trouble for the market as well. But we're up beyond the 90s now. As this continues to move higher, honestly, it makes me think that I want to be a buyer of silver more, right? But again, you have to time the markets. Don't just buy it because there's a strong probability that it could go higher. We still have to time those trades. So, you know, looking at the fact that we are pulling back here now, I would be waiting for another opportunity to get into this. Still like the $33 level. So if we got back to $33 again, I'd happily look for a potential long around $33. But if I look at the 4-hour chart, I'm just monitoring this trend here. Okay, so I bought back into silver here. Okay, first trade. Second trade was a little bit higher up. It was around this kind of area here. So I'm looking for just to do the exact same thing. You know, if this market continues to trend lower, okay, I'll let it go. And then when it breaks, I'll be looking to buy back up into that 34.50 and then potentially beyond that. So I still like silver long. You know, we've got this kind of consolidation here. We're looking at it just from technicals alone. Strong buyers came in towards $33.50. So we saw quite a strong buyer coming there. So maybe we'll just go and test that again and see if we can bounce from that point. So yeah, I don't know where you got it, in, Ibrahim, but you know, hopefully that will turn around for you at some point. You know, I was looking at even breaks of these highs because this is the 4-hour high, so I was looking at kind of breakouts and stuff. So we'll see if the market fails to make a new swing low here, and it fails at this point and it starts to break higher, then that would be a sign for me to start buying back into silver again. But yeah, just keep an eye on it. We have this nice trend structure going on here. I think this is still good to go higher. Correlation with gold is still high, so I still feel like I want to be a buyer of this market, so we'll keep an eye on that. Let's have a quick look to see what we actually saw from, I haven't actually gone through the current trader reports recently, so let's have a look at that. So we saw them decrease positions in silver overall, so the net change was negative 1,300, so they decreased their long positions, decreased short positions. They decreased their short positions on gold. So hedge funds are actually getting short gold at the moment. So what does that tell you? Does that tell you that this recent rally is driven by something else? You know, is it just retail demand? Is it central bank demand? You know, net change minus 8,000 in total. So they cut long positions by 5,000, added short positions by 3,000. Okay, so I think something's going to change in a bit. Platinum also as well. Ibrahim, I hope so. Oof. Don't like these words from traders. I hope so. Well, you know, let's see what happens. It depends. Yeah, at the end of the day, you've put risk on. You know, be comfortable with the risk. If you're not comfortable with the risk, close the position. I closed. Now this might shock you a little bit. So last week, my data. Let me just go to custom period here. I want to go to from 24th of March. Monday the 24th of March to the 30th. We'll go to the 31st of March. If you want to know how many trades I cut early last week, I've got 3 trades. No, hang on. 1, 2, 3. That was the silver that I took half a position out. So 3 trades I cut early last week because they weren't doing the right thing. Okay. This is something, if it breaks 33.50, I will close. Okay, good. Okay, good. You have to have these kind of things in your head, right? I am not afraid. This is something that it took me a real long time to get over, because you are realizing the losses in your trading account. But I cut 3 trades last week in a loss. Okay, so the first one, I actually sold Aussie Kiwi. Okay, so let's go take a look at Aussie Kiwi. I sold Aussie Kiwi, right? And I know where I sold it because I got into it early. So I sold it on the 26th. And that's not the right date. The 26th, I sold it at the 109. I think I must have took this on a lower time frame. 109.87 is where I got short on the 26th of March. So somewhere in here, I took a short position on Aussie Kiwi, right? Which again kind of went against my rules, but I had a sort of large stop on this. So I'd still technically be in this right now, but I must have took this on a lower time frame because my stop loss, although my stop loss was 1.1038. I wasn't here really over the weekend, so I haven't journaled or anything. So this is why you should journal at the time. But this was my trade. This is what I was looking to do, right? And I was short Aussie Kiwi here, even though I shouldn't have been really, right? Why? Because look at the trend structure. There's nothing there to suggest short this market. But it got to this level and I was trying to front run that break, which you don't do, you know, even though I've been doing this for a long time, you don't do that. But I recognized it, right? I recognized it. I cut it really early. So I cut it the next day when it wasn't going in my favor for a very, very small loss. Okay, so cut that one. I also took a short on dollar yen, okay, which I'll show you actually now would be in profit. Okay, so when I look at dollar yen, I got short here pretty much. So my entry price was 150.19, right? Profit level was 147.30. Okay, and my stop loss was 151.50, 151.56, 51.56. Okay, so this would be my trade. It's still be in profit right now. It would still be in profit right now. But I entered on the 25th. Okay, so this candlestick here. So basically what happened was I was looking at the hourly chart this time and I saw this breakout, this head and shoulders, right? Market came up, formed that head and shoulders, it broke out. I sold here. Okay, put my stop loss. I put my stop loss in a place where I knew I was really wrong. Okay, which was up above this 151.50 handle, because that's where I thought I'm definitely wrong at that point. However, market then just turned. Okay, boom, 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 kept going higher and higher. And I thought to myself, you know, as we kind of breached and held into this 150, 150, that this probably wasn't the sort of trade for me. So I ended up cutting this as well for a very small loss. Okay, a bit bigger than the Aussie Kiwi loss, but I cut that for a small loss as well. I cut that at 150.61. So I think pretty sure as we broke into this new high here, so market made a new high. I said to myself, this market's probably going to trade higher. So I cut the loss early. So again, trend structure changed. I got out of the position. I was going to get back in. Haven't got back in because we're closer to that sort of trade tariff narrative. But this is sort of, you know, the market setup that I was in at the moment, and this would be in profit right now. What was the other one? The other one was EUROAUS, which I spoke about at the start of last week, where I cut it for a very small loss as well. So I took how many trades did I take? 1, 2, 3. I took 4. 1, 2, 3, 4, 5 trades last week. Okay, 3 of those I cut for early losses. The other 2 trades were silver. The other 2 trades were silver long, and I made a profit on those. So it only took 2 of my positions to actually make money while I cut losses. So just to kind of show you, it's when things start to change, you know, make sure that you recognize it early and cut it early. Because if I'd left those in, I'd have had 2 full losses. I would have had 1. Well, actually, Aussie Kiwi still be in as well. I'd have 1 full loss, which EUROAUS, but that would have been a full 1% loss. And I narrowed that down to actually it was like 0.19 or something like that of a loss. So it makes a huge difference knowing when to cut the trade, even when it's not in your favor. You know, the big thing for me is if I cut it and then it performs the same way, I just get back in. You know, arguably should have done that here, but I didn't really want to trade that late on a Friday. Do you always execute on H4 candle close after? No, it's not always H4. You know, sometimes I try and go H1, sometimes H30, sometimes 15 minutes. Really depends on where I think the market is in terms of that structure point. If I'm trying to look for the daily going into the primary phase, then ideally I want to look for the 4 hours. So, you know, when I look back at this and I see that this market trend is continuing higher, really the short for me would have been probably this candlestick here, right? Because it breaks that 4-hour low there, this kind of consolidation and that previous 4-hour low, and breaks below the 50 moving average. So really that should have been my short, and it should be something that looks like this in the market. But we came up into that 151. I was looking at the hourly change of trend, I had it. I took the short thinking that that was going to be the start of the move, and it wasn't. Market came back up. Yeah, buying Aussie Kiwi, nice. I'm not still in dollar yen. I don't know. I can't remember what that one was from, Ibrahim. I don't know whether it was this dollar yen one. My dollar yen target was about just above 147 because we got the whole number right at these lows. So we usually like to just kind of go in a little bit above that whole number there. So, guys, I might leave it there. We've been going for about an hour and 10 minutes or so. So I'm going to leave it there. Remember, tomorrow is a big, big day in the markets. Honestly, I feel like the markets are just going to either add to risk going forward. I think we're probably going to see a little bit more stock market declines throughout the day. But I wouldn't be surprised if this day ends up being a bit of a nothing day as well. You know, a bit of back and forth from buyers and sellers because of this kind of anticipation of what could potentially happen tomorrow. So be careful with your trades. Look, at the end of the day, sometimes it's better to not risk anything in the market than to just risk for the sake of risking. Obviously, there's no reward without risk, right, at the same time. So if you are going to put some risk into the market, make sure that you it's appropriate for you, and that you're okay with your decision. Okay, so thank you for joining me today. I appreciate it. I hope you enjoyed the content today, and if you did, leave the stream a thumbs up and subscribe, and I will catch you on Thursday. Okay, so see you later, guys. Appreciate you all, and I'll speak to you soon.